Now, let's discuss the benefits of T-bonds. First thing is their safety. Treasury bonds are popular among investors because they are a safe investment even in a distressed community. After all, the credit of the United States guarantees the return on the bond. Also, there is a very, very remote possibility that a revolution might overthrow the government in the near or far future. The American economy remains to be one of the more stronger ones around the world because of its diversity. It is not reliant on a single resource like oil. Another reason why it's safe is that the Treasury Department does not have the option to call most bonds. This assures investors that they won't have to mandatorily redeem the bonds before their maturity. The market for treasuries boasts two distinct characteristics. It is very huge and is exceedingly liquid. Investors, buyers, dealers, traders, and brokers can buy or sell them at any time. And because these bonds are now electronic, it has all become easier and faster since there are no more paper certificates to transfer. The government is quite transparent about the details of their bonds so that the buyer and seller can determine the real value of a bond at any point in time. This makes trading a lot more efficient since every party is aware of the value of the instrument that they are dealing with. As we've said, you can enjoy tax exemption from state and local income taxes for your interest income from treasury bonds, but not from federal taxes. The other components, on the other hand, may still be subject to tax, such as when you sell them or redeem them at maturity. If you buy a bond on the secondary market at market discount, buying it for less than the face value, and you keep it until it matures or sells for a margin, that profit will be taxable under both federal and state tax laws. A market discount is different from an original issue discount, OID. When you sell a bond or let it mature, your gains when you've purchased it at market discount becomes capital gains, while OID gains simply fall in the category of income. However, each financial tool has its own risks. Before investing in treasury bonds, you should be fully aware of the different disadvantages and risks related to them. First is their low yield. Yes, they are safe, but they don't exactly make you feel like you've won the lottery. The rate of return is different between bond issues, but even if you keep them until they mature, their returns remain comparatively low. Other instruments that are riskier tend to offer higher returns. If you're aggressive and can comfortably put your money on instruments with high risk level, or if you're seeking a higher return on your investment, treasury bonds would be on the bottom of your list. And one more thing, you need to wait at least 10 years to redeem your bonds. Interest rate and inflation risk are another thing you need to take into account. Should the interest rates rise, the value of the bonds on the secondary market may go down. This will affect your income if you are disposing of your bonds during this period. Inflation can overshadow your income from the bonds. An investment should generate enough income for you to live decently, if not in total comfort. However, the rates of returns of treasuries somehow can fall below the rate of inflation. For example, in August of 2018, the average returns of T-notes and T-bills stood at 2%, while inflation was at 2.7% for the month. Historically, treasuries find it difficult to keep in step with, much less overtake the inflation rate. Most treasury instruments carry long maturities, so when great investment opportunities present themselves, it may not be easy to grab them since you've tied up your cash to these instruments. It may also take a while for you to cash in on your investments, such that the window of opportunity might close on your urgent liquidation, may deplete the amount that you were hoping to realize. The only exception is T-bills because they have shorter maturities. On the bottom line, from several points of view, treasury bonds are an excellent venue for investors, prospectors, hedgers, and traders to mitigate risk and trade according to the ups and downs of the economy. They have great flexibility, and when you want to trade from the short side or the long side while actively immersing themselves in the market and providing much needed liquidity to their holders. That's it for now. On our website you can find more posts as well as calculators and other financial tools. Invest in treasury bonds? We would love to know your thoughts, so feel free to share them with us in the comments below. I hope you enjoyed it, and don't forget to subscribe to our channel on YouTube to get more financial educative videos.